Welcome back, my awesome people. In today's episode, I will be discussing the 5 reasons why I do not invest in Bitcoin or any other form of cryptocurrency. Blockchain is a different story. I do invest in blockchain technology, but just not cryptocurrency, like at all, like none, zip, none. Bitcoin has become a popular investment in recent years, but there are some downsides to investing in Bitcoin and cryptocurrencies in general. Technology has transformed almost everything that we do, so it only makes sense that it would change the way that we pay for purchases. Cryptocurrency stands to innovate the financial market. Of the cryptocurrencies out now available, Bitcoin has made the biggest name for itself. Created in 2009, Bitcoin has continued to dominate the market with promises of lower fees than other cryptocurrency options. On the surface, it might sound like a great time to get in on this emerging trend, especially if you can buy at least one coin and hold on to it for a while. Maybe it will increase in value. All you need to do is set up a wallet and start buying. After all, what could be easier? Not so fast. As with any investment, it's important to take some time to research an asset before adding it to your portfolio. There are some things that make cryptocurrency concerning to financial experts and to amateurs like myself. Investing in Bitcoin is similar to investing in real estate or gold. You aren't putting the money into stocks. You're purchasing a digital coin, which you can then spend as you would using a credit. So if you're building your portfolio, this gives you one more asset to monitor. There are some benefits to cryptocurrencies as an investment though. You won't have to worry about trading hours or regulations, but instead of your trades being monitored by a broker, your cryptocurrency transactions are logged into a ledger. That ledger is publicly accessible, and although your trades aren't logged with your name or contact information, the transaction itself can be viewed by anyone. Earlier this year, Bitcoin, the largest cryptocurrency in the world by market cap, hit a milestone. It handily topped the psychological $60,000 level. Bitcoin has gotten an extra bump in recent weeks from a handful of brand name companies adding it to their balance sheets or accepting it as a form of payment. Tesla purchased $1.5 billion worth of Bitcoin to add to its balance sheet, with enterprise software company MicroStrategy buying in excess of $1.1 billion worth of tokens. And now with the emergence of the metaverse and digital products, various crypto and digital tokens are taking over as the main currencies for these digital worlds. And even with all the big companies buying Bitcoin and other forms of crypto to allow customers to use to buy either physical products or digital ones, it is still a very, very volatile form of currency. One day you buy a product that's worth $10,000 in crypto, the next day that product could either be worth a lot less or a lot more due to crypto's volatility. So personally, I don't think highly of Bitcoin or any crypto as a form of stable currency, and I have 5 reasons why I'll never buy it for my portfolio. And for more strategies and tips on money, investing, and creating financial independence, follow me on my Twitter at Jacob Rant and get bullish on that subscribe button for the YouTube algorithm and smash all the likes and bells to get all the updates on my fantastic investments. And comment below with what cryptocurrencies you currently own. And if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with and $0 commission fees that won't eat into your profits, especially if you're buying penny stocks, sign up with my Wealthsimple link down in the description box below for $25 of free real money to trade with. Link is below. The first reason I do not and will not add crypto to my portfolio is that its scarcity is a myth. Diehard Bitcoin fans often mention its 21 million token limit, with 18.6 million Bitcoin already in circulation. It'll take close to more than 120 years before the remaining 2.4 million tokens are mined and put into circulation. The argument is that Bitcoin's fixed token count will help fight against the ongoing devaluation of the US dollar as the money supply expands. But the flaw in this thesis is that Bitcoin's scarcity is nothing more than an illusion. Community consensus could decide at some point in the future to increase Bitcoin's token count. So even though right now it is highly suggested that Bitcoin does have a finite amount, in reality, crypto is not backed by any finite physical asset. And as such, more Bitcoin can and will be created in the future. On the surface, it seems like now is the time to get into Bitcoin and alternative crypto. But when the world reaches 21 million mined Bitcoins, they will increase in value due to scarcity, right? Well, there's a problem with that line of thinking. Assets like gold and oil are finite resources. At some point in the future, there could be no more oil or gold to mine. But Bitcoin, on the other hand, is a digital currency. The 21 million cap was set by a human. It's possible that in the future, that decision could be overruled and more Bitcoin could be produced. And that goes for any other crypto or digital currency, which means it isn't guaranteed to ever become scarce. What we're seeing is day traders having a field day, and that's not something that I, Jacob Rant, want my money in. The second reason is that Bitcoin and alternative crypto are not even the best options among financial networks. Bitcoin's network has been regarded as a game changer for financial payments. Rather than using traditional banking networks and waiting up to 1 week for payment to be validated and settled, Bitcoin can do so in an average of 10 minutes. However, Bitcoin's usage is strictly limited to the payment side of the equation, and it's not even the best network at what it does in the financial space. For example, Stellar Crypto can settle, validate, and settle financial transactions in mere seconds with its Lumen coin, and Ethereum provides non-financial blockchain applications with the addition of smart contracts. Once again, Bitcoin may have first mover advantage, but it is not the most innovative or functional crypto on the block by a long shot. My third reason is the blockchain network. Now, blockchain has been an enterprise disaster so far. The Bitcoin journey is really about advancing its underlying digital ledger, known as blockchain. With blockchain, transactions can be validated and stored forever in a transparent way. While there are plenty of applications for blockchain on paper, we haven't seen these ideas translate into real-world functionality. Businesses have been unwilling to replace their proven network infrastructure with untested blockchain technology, creating something of a catch-22. CoinDesk reported that tech giant IBM practically dismantled its blockchain division because of this uncertainty. So in short, enterprise blockchain has been a gigantic flop and will be skeptical of changing its networks to accommodate blockchain technology. The fourth reason is that storage and security issues are worrisome. I have no desire to deal with the complexities of storing and protecting Bitcoin from hackers. Bitcoin must be stored in a digital wallet kept on a hardware-based platform or on the web. Although wallets are built to be secure, that hasn't stopped hackers from exploiting vulnerabilities to steal Bitcoins. Security experts advise keeping very little money in your online wallet, with most of it stored offline. If your wallet is hacked or stolen, the Bitcoins on it will be lost forever. Either way, it can be far less secure than most people realize. An estimated $2 billion worth of crypto tokens, including at least 50,000 Bitcoins, were stolen in the first 5 months of 2021. And you'll get absolutely no protection from the Federal Deposit Insurance Corporation either, or the FDIC. And finally, the fifth reason is the tax situation can be burdensome. If you think you hate doing your taxes now, try getting involved with Bitcoin or any other crypto. Since the Internal Revenue Service views cryptocurrency as property, all transactions must be accounted for via capital gains and losses. You'll have to report more than just buying and selling Bitcoin. If you purchase Bitcoin and sell it to buy another cryptocurrency or a good or a service, you'll have to report your cost basis and disposition price. It sounds burdensome, especially if you're using crypto to buy goods and services. As with any financial transaction, your Bitcoin purchases and storage will need to be reported to the IRS. This can add yet one more thing to keep up with throughout the year. Cryptocurrency income will also have to be reported at tax time, along with the rest of your taxable income for the year. That means you'll pay taxes on those earnings. And speaking of the government, another issue with Bitcoin and crypto is that it is not fully anonymous. For Bitcoin to truly become a globally dominant currency, the government will likely want to have more of a hand in it, and staying anonymous as you move money through ledgers won't be an option. So, Jacob Rant, will you ever invest in crypto? Well, cryptocurrency enthusiasts and my favorite conspiracy theorists will tell you that someday digital currency will replace all other forms of currency. But while plenty of people are eager to invest in it, it's hardly poised to take over real life wallets anytime soon. Yes, the number of businesses that accept cryptocurrency as payment has increased, but it isn't as easy as presenting an app on your smartphone. You'll usually have to go through a third-party service to spend your Bitcoins, and many customers aren't willing to jump through all the hoops to really take over the world of payments. Bitcoin and other cryptocurrencies will need to cooperate with mobile payment solutions like Apple Pay and Google Pay. They may even have to forge a partnership with Visa or MasterCard. Consumers will also need to shift from thinking of Bitcoin as an investment to a payment method for it to truly replace cash or mobile wallets. Spending so much on each Bitcoin also makes it tough to diversify. You may find your portfolio is more heavily weighted toward Bitcoin, especially if you've purchased multiple coins. This means that if there was another crash, you won't have the other assets necessarily to offset your losses. Ultimately, you can decide whether Bitcoin and crypto is a good investment. If you want to buy one or two tokens and try the technology out, it might be worth it. But as long as you have done your research and assessed the risk, you will be in a better position than those buying based on emotions and fear of missing out. But remember, my awesome people, just like all the investments I mentioned in my videos, please do your own due diligence, because I am just a clown on YouTube. And again, if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with $0 commission fees that won't eat into your profits, especially if you're buying penny stocks, sign up with my Wealthsimple link down in the description box below for $25 of free real money to trade with. Link is below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified of when I post my penny stocks, REITs, dividend, and speculative stocks from my portfolio and other investments I am currently buying and selling. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride together on a journey of health, love, success. So until the next video, stay ranting.